All righty. We are being joined by the one and only Mr. Chlup. Did I get it right?
Yes, you did.
Cool.
Yes, you did, Captain. Thank you for having me back. Nice to see you.
Good to see you again. Jason has been on a number of times, and basically he's from LOM, and he's sort of been introducing me, and I guess you too, if you've been listening, to the market, to investing and all that. LOM, what is it? Lines? What is it?
It stands for Lines Overseas Management.
There you go. All right, got you covered. I want to make sure we say that right, because people just know LOM, but it's...
Yes, a lot of people say LOM, but LOM is actually what we go by.
All right, now, have you been getting any calls or responses or anything to your interviews that you do here? I mean, people curious?
Yes, people are curious. People are wanting to learn, wanting to hear about us. And that's one of the benefit of us doing this and creating awareness out there for the listeners, just who think they see LOM and they see our advertising. I know we're quite active on social media and things like that, but sometimes you don't like clicking on links, or if you're unsure of what you're looking at, and maybe the people they're not sure exactly what we do.
I think
creating
just
awareness.
Walking past your building makes people curious, looking up at that building.
Well,
all right.
that's what we want to bring. We want to attract people to us.
That's one of the exterior is one of the few ones I've ever seen. What is that, granite or something? What is that, polished granite or something?
Yes, so it's we're keeping it looking good.
Yeah, it looks great. Anyway, market update. What's happening in the market right now? You got anything for me in that respect?
Well, look, there's always lots of things happening in the market, and that's why we always remind the investors sometimes not to listen to all the noise in the market. But yes, lately after August, slight pullback in the market. If you looked at the S&P. Pullback of about 1.7%. It's a slight pullback. September seems to be following that direction. Currently also pulling back about over 1%. So things are like that. If you're a statistics person, you will see and know that September unfortunately hasn't been a great month for investing historically. But I suppose that's just statistics.
I mean, like storms. Right now, you got a major strike, automobile strike going on in the U.S.
Correct.
All these things affect the market, right?
Yes, and look, it's sometimes with that, and again, that short-term noise and news in the market, we forget that if looking at the S&P, I mean, it's still up 16% or around 16% for the year. So, this... If you look deeper into that, I mean, you may have heard the term the Magnificent Seven.
Mm-hmm. Those are the top stocks?
That's basically the 7 biggest mega cap stocks that have been carrying or running the market. So, in the broader spectrum of things, outside of those 7 major or mega caps, the general market has been pretty flat or sideways, a little bit up, a little bit down. So it hasn't been... The rest of the market hasn't been as great as the actual performance of the market, because those mega caps are so big. They have such an influence on the market. And
yeah. So when you say mega cap, I instantly think of tech industries like Apple,
Nvidia, Meta, Amazon.
When I was coming
Microsoft.
When I was coming up, it was like Coca-Cola. Those were big back in the day. If you had Coca-Cola stock or Kodak, take Kodak for instance. Because of the cameras on the phone, Kodak
there's many
did a nosedive.
There's many different things, and the market's always evolving. It's always changing. I mean, tech is strong now, but previously healthcare, during the pandemic and things like that, healthcare was the push. But there's also tech can lean into different directions. Mm-hmm. So it can be tech in healthcare, and that's where there's always opportunities in the market. But we strive to say, like, that's why you want to look at professionals and get some advice on investing, because you can't always stay up to date with the trends.
You guys
and
are
what's
watching
happening.
Everything. Yeah, you're watching
everything.
Yes,
we have a full team that's their full-time
that's their job. All right,
yeah.
and so a lot of times there's short term and there's long term, and if you're brave enough and if you're secure enough, long term is the way to go, because these companies didn't just fly by night. A lot of them are pretty substantial, and they're there for a reason that they're valuable. We mentioned Apple just for the sake of it. Like Apple's stock is
Well, yeah.
If you got in on that a long time ago, you'd be all right, wouldn't you?
Definitely. And look, I mean, Apple's, yeah, they're just a market performer, and they had their release last week. So with their new phones, new watches, things like that. These again, that's an example of news in the market. They often say the critics come first. So with market releases or things like that, the noise sometimes has a negative effect on the stock price, or leads investors to be wary of it. But it's often a short-term effect, and you would have seen that post their release. There was a little bit of a dip, but it seems to have mostly recovered and done better over the last couple of days.
People hear this all the time, the Fed interest rates. They hear that, but I don't know if they understand what that means.
Well,
unlike a bank rate, as Fed rate.
Well, look, the Fed rate is the way that the rate that the banks lend their extra reserves to each other. So that affects interest rates all around the world, and specific to each sort of region, there will be rate increases, decreases, or skips. And actually today the Fed has their meeting where they deciding if they're doing an increase, a decrease, or a skip or pause,
but they do
whatever you want to.
Little percentage.
Yeah, the 25 bibs or 1/4% is usually the general, but I mean there has been increases of higher, there's been decreases of higher. So the general expectation today, or the widespread expectation is that there will be a pause in the Fed be increasing. I mean you can never rule it out, but that's the widespread.
But they do have to make an announcement to let people know.
Yes, so that they will make an announcement to say that they're gonna or we're expecting that they're gonna pause at the moment. And even though inflation seems to be persistent, I think possibly towards the end of the year, and that's our view, towards the end of the year or in November, there may be an increase again. But that's...
last month, I believe, we were talking about dividend value and your portfolio and all that. People want to know about that.
Yes, we had some good interest in that, and glad we can touch on that again. People reach out to us, they ask questions, and where we feel that there's interest, we want to get some more information out there. So just to give a quick summary on the Dividend Value Portfolio, this is an offering that we have, which is exciting for us and a fantastic opportunity, because for only a minimum of as little as 250,000, you can get exposure to a discretionary portfolio. And this discretionary managed portfolio has two main strategic focus points, and that's firstly focusing on value stocks, which is deemed by our asset management team to be currently undervalued. And the second point that it aims at is higher yielding dividend stocks. So that gives you the benefit of your portfolio growing with its dividends, which more than covers costs, while you're being patient and hoping to take advantage of the capital appreciation of those value stocks. And just to dive a little bit deeper into the value stocks again, and just remind the listeners, these are value stocks are well established companies that have
trading below, though, right?
Well, look, it's well established companies. They have good fundamentals. It's not that they have bad performance. They're just in a dip for whatever reason in the market currently. So that's where investors would see opportunities, and our asset management team see the opportunities in those kind of companies to take advantage of where we can grow.
You call your investors and you say, look, there's some potential right there. You might want to look at
Well, that's exactly what we're doing. we see this as an opportunity. We've lowered the minimum value of the Dividend Value Portfolio to the 250,000. And it's giving the opportunity for you to take advantage of where we are in the market. And just on that, just as a reminder to the listeners who may not be interested in a portfolio like that, we do have offerings again from 25,000 and above. We've got a wide range of offerings and options that any investor can explore. So that's from your first-time investors all the way through to your experienced investors that are maybe just looking for to use our platform and do their investing through us.
All right. So I guess people want to know in these uncertain times, I mean, there's so much going on in the world, like in Morocco and all that. We had that big, flood and and things like that. They sort of affect the world and all that. And so we call these uncertain times hurricanes, storms, strikes, all these things.
Hey, sometimes it's a hurricane in the market.
Yeah,
but
same.
but in uncertain times, we will always just go back to clients and say, talk to us. Let's work together. Understand what you're looking for. Maybe your risk appetite, your time horizon. The fundamentals that you're looking for, and then we structure a portfolio and build your investment portfolio from there. I will always harp on the fact diversification is key, and that's what can mitigate. That's what can mitigate the risk. Yeah. So as long as you have time horizon, or a longer time horizon, you're willing to give it time in the market.
Long term, people.
Yes,
that's what
long
it means.
term. Diversify your portfolio. Make sure you've got all your bases covered.
But Jason, we can expect dips, right?
Definitely. Look, the dips, unfortunately, they do happen. But for an investor who's got the time horizon, who's got a risk appetite, this brings up opportunities to invest. So, when you want to take advantage of that, of that opportunity, then you see it there. And if you're risk adverse and you're looking for a more conservative approach, or you don't like if there's volatility in the market, then you go with a very conservative investment, and that's where, for example, a money market suits you best, and you grow your portfolio there, and you use the conservative approach.
When you talk about diversity, there's so many different ways to go about investing your money.
There's many, and that's why everybody has a different opinion, you've got to go with basically a blend of advice and how you feel. That's why we'll never sit down with a person and say you must do this.
Yeah.
We work together, we build a relationship, we understand each other, and we work towards the common goal of helping you build your investments and your wealth.
Do you find some people have a hunch, or some people have a feeling about a certain company or a stock? Do you have people who are even emotional about certain things? Do you have that?
Yes, all the time. And sometimes you need to just reel in people and go in a broader understanding of things. Sometimes it's you can't go with the heart, because maybe you have a feeling about something. There's nothing wrong with doing a bit of exposure, as long as you limit your high risk exposure, especially depending on where you are in your life and what your goals are. You limit the high risk exposure and ensure that you have diversification across the portfolio.
In the back of your mind, do you have an example of people who stayed long term and profited and got
there's always those examples. Anybody, if you look at the history of the general market, it's always on the up. So anybody who is willing and has the ability to, sometimes you need the funds, but as long as you stay the course, you understand the plan, we show you the trends of the market and how things happen, and through the dips, you will benefit from staying in long term.
All right. I want to let you know their website is LOM.com. You can contact them. The main line there is 292-500. And what's that, 5,000?
Sorry, 292-5,000.
5,000.
Yes.
You left off a zero. You better not leave my money like that. Better not drop a zero on that one. All right, the main line, 292-5,000. You can ask for Jason. He can take good care of you. You have a number of people there who also can work with you as well.
Definitely. You reach out to us. Use the contact function on our website. That's the simplest. If you're unsure, Google LOM. You'll find our website. Use the contact function. Ask for Jason. And if I'm not available, a colleague will definitely get back to you, and let's see how we can assist you.
Now, I'm big on young people investing, and I'm big on young people getting started, whether they're saving money in the bank or whatever. Like, look ahead to the future. Not all young people have $200,000 to invest, but they could be saving to make those investments. Do you urge young people to study the market and do all that?
Always. If you're developing your knowledge and your understanding of how it works, that's great. That's what we're here for. So that's why we always say, reach out to us. our consultations are absolutely free and no obligation. So, at least you can see what's out there and just experience of that there are options and
become aware.
Yeah, well, improve your understanding, and then you can make better decisions, and you can be helped to make better decisions.
All right, you make it easy for me. I'm serious. I'm thinking like he's cleared up a lot of stuff. All right,
that's what we can only hope for.
All right, Jason Chlup, what do you consider the investment counselor?
Investment advisor.
Advisor. All right, good talking to you.
Thanks for having us again, Captain. I'll see you next month.
All right.